Back on Morning Movers, we'll look at Boeing. That stock higher in the pre-market after receiving two significant orders from overseas airlines. Norwegian ordering 30 787 planes, its first order since 2017, and up to 75 787 Dreamliners from Turkish Airlines with the option for 25 more. Keep in mind, shares of Boeing up 40% over the past year, but less than half of what it was at its peak of 446 back in 2019. Time now for Options Corner. Joining us for a deep dive into this chart is Rick Ducat, lead market technician. All right, let's talk about Boeing. Very different year this year than last year.
Yeah, for sure. Boeing seemed to be one of those stocks that just couldn't stay out of the headlines for various reasons. But now it seems like perhaps the momentum of the news flow has shifted. Boeing now outpacing the broader defense and aerospace sector, ITA, as well as the industrial sector in the broader market here. But to think about that defense sector specifically here, past 5 years, Boeing is obviously the laggard versus Northrop Grumman, General Dynamics, and Raytheon here. So some work to do for sure to catch up in this sector. But if we were to look at the chart more specifically, we can see that for the near term, price has been trending downward since we hit these highs just below 243. You could draw this downward sloping channel type shape between our two white dashed lines here. Notable horizontal levels include 236 up here, a series of highs, and then 218 highs, lows, highs, and then 210 could be another area to watch as well because it was other high points. If we were to also consider our moving averages, notice that our confluence of moving averages comes in right around that 218, 220 level here. So that's a notable upside area to watch. RSI still moving lower, still bearish. Finally, if we were to look at our volume profile study, we can see that we are in the thick of a volume node as of yesterday's close here that lines up with that 218, 220 area as well. Volume picks up again near 230, which also lines up with our yearly linear regression line, our line of best fit.
Okay, and Rick, how would you approach this from an example trade point of view?
Right, so if we were to look at the expected move for October 17th, that's our purple shaded area, we can overlay our other studies here. We can see that we have this notable confluence near about where our mark price is, 221 or so, near 220. So if we were to consider that, we could take a more bullish outlook for an example trade here, given the positive news. So an example trade could be -1, October 17th, 220, 215 put vertical at a 175 net credit here. So that would be a short put spread that was pretty close to current prices here. And you'd be looking for this neutral to bullish trade just to stay above that break even. The break-even comes in at 218.25, which is about 1.7% to the downside. The expected move was about 7% though, so certainly not a sure thing here. But this would be a trade that you'd have to look for when the market opens. We do our best to estimate where a potential credit might be coming in here, but be on your toes. This would be a more optimistic play based on the news flow for Boeing here. 175 max profit is the credit received, 325 max loss.
All right, thank you, Rick, for that example trade there on Boeing. Shares are up more than 4% in the pre-market.